seeing here is DraftKings continues to lose share on the platform tracker and look worse and worse. FanDuel to a lesser extent. I think FanDuel, it's just more. Now, those are the two big market share leaders in sports betting, online sports betting. Now, FanDuel is doing really, really well on so many metrics. And I think that, function of them sort of losing a little bit of share is more of a function of just all the competition, where I think DraftKings is actually struggling and losing consistently more share than FanDuel. But what we're seeing for Penn and Barstool is pretty good, consistent gains in our tracker over the years. I mean, remarkably consistent gains, which is good. Still, relatively low share, but that's also a function of everybody else spending like crazy and on external marketing. And Penn and Barstool, that was not their approach. They're going for long-term share. And MGM continues to do well, particularly in iGaming, where it's the market share leader, doing a little bit better. Now, they had some in our scorecard, at least we saw some downturn for a number of months, and now that's picked back up. So they're doing really well. They're spending a lot of money. That's really the issue here, and it's going to be really interesting if, as we suspect, marketing spend and promotional activity starts to wane a little bit as the industry moves towards profitability, which we still think is a little ways off. But as that happens, it'll be interesting to see where market share goes. And our belief is that Penn and Barstool, just from the fact of everybody spending less and them spending the same amount, probably will continue to gain share.
On Penn, a name you guys have liked for a while, but obviously there's better entry points. How are you thinking about, just as you look over the next year or so, Todd, the catalyst that you would like to see to actually get this thing and really get loud on the long side here? At some point, the value is there, but you need a catalyst to start seeing a change in direction.
Yeah, I think part of it will be on the sports betting side, because I think that the stock has been unfairly punished for being associated with online sports betting. DraftKings, we all can see what that stock has done, and we haven't liked DraftKings, still don't like it. But I think with Penn, I think some market share upticks will help, and that'll come as soon as we start to see spending moderating, as they mentioned before. And I think necessarily their market share will go up. Look, I mean, quad fours is not really good for GLL. I think regional gaming is a little more defensive, though, and we'll get into a lot of that next week. And we're still seeing, pretty good trends, all things considered. But we will get into why it's defensive. But I think the sentiment around the consumer needs to improve. I mean, I think regional gaming will outperform on a relative basis, like long regional gaming and short hotels, but it's still going to be an uphill battle with what everybody thinks is going to happen with the consumer. But, our view is if housing prices hold in, I mean, they don't have to keep going up, but if they hold in, I think the average regional gaming customer is going to be fine, because they are 60 years old and their wealth effect is really impacted by housing prices. But if housing prices really start to crack and we start to worry about negative equity and things like that, I think that could be a bigger issue. Now, I'm not saying that business is going to be great in this environment, but it should be better off than most of the other GL sectors.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.